Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We've got Connie Hill with us in the chat. We like to joke that the two redheads are going to take care of you here today. A little fun there. Just real quick, Debbie Fayez, Silas, Josh Pink, Jessica Bush, 85831, WW, and many others. Welcome to all. Today's class, Trading Growth and Value. Now, trading is not just buying stuff, okay? It's also buying it, managing it, and then actually exiting positions. Want to actually see if here today we can find some examples of exits or stop adjustments. And so that's what we're going to talk about right off the bat. So let's go ahead and actually hop right in. Now, when we actually discuss examples, remember we do post examples on X. They're not recommendations, but if you go to Connie's handle or myself's, there's my handle for X. When I'm not teaching, I post there throughout the day, so check that out. Also, quick reminder that as we get going, the information here is provided for general informational purposes only, should not be considered an individualized recommendation or endorsement. Also, Schwab does not recommend the use of technical analysis as a sole means of research. When we do our examples, we'll do those in the Paper Money software application. And also remember that investing, when we talk about dividends, those dividends may be reduced or they may stop paying dividends completely. Now, what it doesn't say is it could also be increased. But the biggest thing is those dividends are not contractual, okay? They can be changed or completely stopped, okay? And that kind of sometimes depends upon the company's growth prospects and where they feel like they are financially. Now, also remember when we talk about examples, they are just that. And I want to give us a quick reminder as far as some upcoming events. So you know that we actually have online courses. We actually do classes that are live. They're also recorded, but we also actually come to your local area. Now, we have one coming up, the Chicago Market Drive, October 4th. That is a one-day event. We just did that in Dallas, okay? We're going to be coming to the Chicago, an area near you at the Renaissance Schaumburg area, okay, or the Schaumburg Hotel. Nice area. So check that out. You can also go to schwab.com/events and actually see the listing as they start to go into 2026. We're going to be doing a two-day event down in Orlando at the Orlando World Center Marriott. They got a big water slide there. Okay, I don't know if you've actually been to that. It's actually pretty fun. There's no age limit. Okay, so but it is actually quite a rush if you've ever been there. A little fun there, and actually a nice lazy pool. So it's not just like learning and having fun, but it actually is, some great places to go as well. So check those out. A lot of people tie them into vacations, business meetings, whatever. Our last one we're going to do is as far as the Market Drive, November 22nd, the Anaheim Marriott. Okay, so those are just some of the ones we want to highlight as well. Anyone that is a Schwab client, they can come to these for free. So go to schwab.com/events and you can find out more information. Now, just real quick as we get started, I said when we're getting going here today, I want to talk about exits. I want to look at some positions and ask the question, are there exits on the chart? Now, I think this is where a lot of people, and I think all of us, kind of struggle with making a decision of maybe management or exits, okay? I want to walk through some stocks quickly, but thoroughly, and talk about some of those, and then we're going to look at some other examples here for trades, setups. Now, what I want to do is I want to pull up just real quick. So first off, what would kind of maybe tell us that there might be some sell signals? Well, number one is if I looked over here on the left-hand side, the Dow Jones, 179 points. I'm not necessarily looking at just the point movement. We're really looking at the percentage change, okay? Now, if that percentage change, let me kind of go to this one right here. It would actually be a little nicer. Yeah, I want this one. The reason why I want this one is because it's going to have the trend on it, okay? Now, this is also very important to kind of be properly set up here. When you look at the Dow Jones, the Dow is sitting here at 171. Let's just kind of round worse, if you will, or round to the nearest 0.1%. Let's just say it's down 0.4%. Not backbreaking, okay? It's still showing its trend 3, but overall what you're going to see is there might be some that could be down. We actually take a look at the S&P, down 23 points. Now remember, 23 points out of 6,600. It's really not a ton. but it's down 3.5%. Still trend 3. NASDAQ down 89. Same thing, trend 3. We actually go back to, let's say, the Russell right here, 18. This is actually one that's kind of a little bit more severe, down 0.75%. Now, again, the higher the percent movement down, greater chance that there could be some sell signals, maybe in the index and or individual names. When we look at the trend on that index, it is still trend 3. I want to show you the difference, though, between really looking at the whole moving averages, which are very quick, okay? They're weighted moving averages. They're not like a simple moving average, okay? And I'm going to show you the differences just real quick. Now, if you look at the Dow, you're going to see that when you look at this Dow, you're going to see that the price is below both moving averages. Now, when we see that and we're managing a portfolio, we're thinking, hey, we could be having some pressure in terms of maybe where the stop is. We could also be saying I might be starting to get some red lines on the moving averages and or getting across. Now, it's been a little bit since we actually had the price down below both moving averages. That's why we've been talking about bullish trades. But you got to be fair. You got to talk both sides, where if you start to get some sell examples, where are they? We're going to try to bring some up here today. But if you look at this, this is the first time we could get a close below the moving average, and it's been for a little bit. On the 16th, we went down for a day. I think that was the Fed day. We actually closed below that on the 10th. And what you got to remember is this 10-20, it's very short term. It's really meant for trading, okay? Now, what I want to do is I want to go to this fourth chart in, and I'll share with you this chart in just a sec. Check me on that. It's the fifth chart in. I want to show you what this chart looks like on a regular kind of more 30-day simple moving average. When you look at this chart, okay, when you look at the shorter term moving averages, the whole moving average, the first chart, it really kind of showed like, oh my gosh, it's like the end of the world on that chart. And I'm joking, but that's how some people define it. But if you take a look at this, you'd say, wow, still above the red 30-period simple moving average line, okay? And even if you, for example, take a look at the 10-day exponential moving average, we're still above that. This chart is kind of really meant for intermediate, okay? Now, I just want to kind of show that difference, and there's quite a bit of difference there. If we went back to that chart real quick, and I pull this up, with us seeing the Dow below the moving averages, there's probably going to be some moving averages that are turning red or crossovers. We need to be aware of that, and also need to be aware of, are the stops being adjusted? Okay. Now, briefly, you take a look at the S&P, it looks the same as the Dow Jones. You take a look at the NASDAQ, it looks the same as the Dow Jones. The only one that kind of maybe looks a little different is if you take a look at, let's say, the Russell, and there it is. We see the Russell still in the upward channel, okay? Just kind of pulling back from the top end, if you will, from the channel. Now, I want to kind of show some examples. Now, before we do this, how many of you would like to practice maybe looking at exiting and or adjusting stops? Okay. How many of you feel like you need a little practice with that? Let's take the first 10 minutes and, well, we'll take about 5 or 8 minutes because we talked about it a little bit. I want to take a look at a couple positions, okay? Now, what you're now going to notice is I have these trades or investments broken out by what type of trades they are. They're stock positions, right? AMD, Amazon, you name it. And they're just stock positions. Now, one of the things I like to do, and I'll close these up just real quick, is I like to just, for simplicity, I like to put the trend column on. Now, this is the trend daily, and this right there is the trend weekly. The trend daily, if I pull this up, if I kind of said, look, let's imagine the investor had quite a few positions, and they said, which one are we going to look at first? Well, if we're talking about which one are we going to probably look at first, I would probably look at this one first. Does anybody know why? Does anybody know why I would look at that one first? Well, because that's the stock. If we look at this, we probably see that the stock has gone up, 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 and it might be going up into an area of resistance. And this is where maybe if the investor said, hey, I'm going to sell, they're really selling at a high. Or, okay, at an area of resistance. I mean, what would you rather do? Would you rather sell low or would you rather sell high? Well, the one that's at the high, based upon trend 4, it is ExxonMobil. Now, if the investor says, I'm not going to sell, they don't sell because A, they think the trend line is still there. Second, they actually think maybe that stock might be trying to get above the area of resistance. So I would look at that first. Now, the second one that I would actually look at is this one, trend 5. Why? Because that's actually the one that slipped down and below the 10-period moving average. You fall down. Now, remember, the Exxon was the one that was still high. The second one that's still pretty high that could be falling is really Meta. And the one that's actually already done fallen or still falling is Amazon. Wait, why don't you look at your trend 3s? Because they're still up. Okay? That's kind of how my mind thinks about that. Any comments on that? So in other words, we're trying to go the pecking order. We're looking at stuff that's still high and hasn't fallen yet, hence trend 4, then actually trend 5, and then trend 1. Trend 1 definitely we're going to look at. It's just that it's already been going down. Now, just real quick, I need some help here today, and I want to pull up just real quick the chart, and I want you to kind of tell me what about ExxonMobil. Now, we're going to look at each one. If I looked at ExxonMobil, if we said, okay, what do we see on this chart? It is up near resistance. That's why on the monitor tab, it was showing 4. Now, this class is not a derivative class, but if you were up near an area of resistance and maybe you had more than 100 shares, what might the investor consider? Now, some of you might know what I'm talking about. Others might not. Now, if we looked at this and said, is this a sell signal? It's not really a sell signal, okay? If we're talking about, well, let me say it like this. If someone said, hey, James, I sell on, trying to get that where it doesn't do that. If we're looking at this as, James, I see the 10-period moving average red, and I actually see a crossover to the downside. Now, if someone said, I get in on entry 2, and I get out on entry 2, this would be showing an example of that right now, okay? So now, by the way, if we look at this moving average, you're seeing that actually turn a little bit red if I zoom in, okay? There it is. I know we're not at the end of the day, but it kind of looks like that. We're at least in trend 2, though, okay? Now, what I'm going to do is I'm going to go back to this. Let's say the investor says, well, how would I sell? How do you do that? Well, if I come into this and I right-click, and by the way, you don't need to open that, but this just shows what the position is. If the investor said, I want to sell the position, how do I do it? Well, I'll just right-click on it. When in doubt, right-click, create closing order, and we could say we're going to sell the position. Now, if this was the class tomorrow, and maybe we could practice a different type of strategy, some investors might say, James, I like the trend still, but I think the price in the short term might pull back. Does anybody think that it might fight up near resistance and maybe consolidate a little bit? Anyone else thinking that? Now, let's say we did stocks only, and the investor says, nope, I'm just being disciplined to what I'm seeing on the chart. Okay, I'm going to right-click on this, create closing order, and say sell. Now, you got to remember something. Cash is a position. Cash is a position, okay? We're going to go stock sell minus 100. So if we have 100 and we sell 100, we can kind of see approximately where that position is, go confirm and send. Now, I want to also make sure that we're going to put it at the mid price. Think of that mid price as we're trying to get in between the bid and ask. It's a penny wide bid-ask spread. Confirm send, and if I send that order, it's going to try to fill. Now, the other one I'm going to take a look at that we're kind of seeing a little volatility on, I'm going to go back to, let's say, so I said I want to look at that one first. The trend 5, I think, well, actually it was Meta. Now it's actually gone to really, it's showing trend 1, okay? Now remember, those numbers are going to change throughout the day as the stock price changes. Let's go to Meta next. If I pulled up Meta and said, what is Meta showing here? Okay. Now, if we pull up Meta and we kind of look at this, kind of take a little day-by-day snapshot and kind of go into this, Well, there's on the right-hand side, there's one, okay? There's one. Now, once we get one, we kind of have to ask ourselves, is this sell-off going to accelerate? If the sell-off accelerates, we fall down below the moving average, like the 10. We fall down below the 20, right? And the chances of a crossover happening become bigger and bigger and bigger. Now, you got to remember about technical analysis. It doesn't care about jobs data. It doesn't care about inflation data. It doesn't care. You're just trading what is on the chart, okay? And there's not an asterisk of I'm not selling because XYZ. It's not a good reason, okay? They're just selling it based upon what the technicals are showing. Now, if I go forward to the very next day, again, if we get the price down below both moving averages, the chances that we're going to get that step two becomes a lot higher. Now, if we look on this day and actually said, okay, overall, do we actually get the second red line on the moving average? And the answer is definitively no, okay? Now, let's go back to the stop adjustments, okay? So what I'm going to do is I'm going to go forward to this very next chart, the second chart, third chart, there it is. We're going to go to the fourth chart in. When I now look at this fourth chart, we're looking to see when this stock is right here, and we do not have a manual sell signal yet, and we look at where the white line is, which is the 8-day low, the red line is a 10-day low. Are we at those lows? So in other words, that's where visually or manual, that's where the stop could be. So is this actually giving us a manual exit? No. Has it hit the stop loss? No. Now, do we feel nice, warm, and cozy that this is going to be a great outcome? Oh, maybe not. You got to remember something: until you sell something, you don't make anything. It's all unrealized profits or losses. We go forward to the very next day and say, what do we got? Now the very next day. Now remember, go back to this day. If you're trading or closing below that 20 period moving average, man, we know that sell signal could be imminent, okay? So it was so imminent that the very next day, you actually get the crossover there, and what you're going to see is by the end of the day or throughout the day, you actually really saw three. Now, where was that? That was on 9/23, okay? So on this, if someone said, James, I sell on trade signal number 2, Meta was yesterday, okay? Now, here's what we got to remember. It's not that we're saying we're never going to get back in Meta ever again. We're just saying, look, cash is a position, okay? So think of it like this. If someone says, I want my cash back, they're really saying that the price is below the 10-day moving average. And if the price is below the 10-day moving average, they're saying, James, I would rather have cash. I'd rather actually just sit on cash and wait for a better setup. Now, if you flip this and actually say, you know, James, I actually don't want cash. I actually want the position of Meta or whatever stock it is. When does someone probably want that to happen? Well, it's when the P for the price, the stock price, where it's greater than the 10-period moving average. And they say in that case, they might say, James, I want Meta because I think that capital could appreciate. Keep it simple. That's how my mind thinks, okay? Now, you might have a different moving average. You might have a different length of time. But usually what investors do that ride the trend or momentum, or both, they're trying to actually have a stock position on when the trend is conducive for a stock position. When it's not conducive for a stock position, they say cash is a position. And just because they sell it once does not mean they cannot try to get back in. Now, if I go back and say, okay, well, how does the investor sell Meta? Well, if the investor, we could just right click on Meta, create a closing order and say sell. Now, the question we got to ask ourselves is, was it gain or loss? Now, do we really need to know that? Well, it's nice to know. That position is really down $17. So some of these trades sometimes might just be like, well, it was a neutral, it's a scratch. It didn't do anything, okay? But what they're saying is, I don't want to hold a position that's really not showing the trends that the investor wants. We're going to go sell, okay, that. And now what we're going to do is say confirm and send. Now I want to do one more of these. Now, by the way, if you get it where it says illegal, what is it telling us? It's telling us that we have probably a stop or a target or both on that chart. And all we got to do is just click on that. And if you see two red lines, you actually have a bracket order. We're going to cancel that OCO group. Now, when we actually try to go to sell it, it's not going to say the words illegal because we don't have an outstanding order or two orders to sell. Okay, send. Now, the biggest actually thing is what I want us to kind of think about is, and I just needed those orders to clear through the system. Shouldn't do it now. There it is. Okay, what happened is the server didn't completely catch it. It now does, and now our order to sell has been accepted. Okay, that's what happened. Now, I want to kind of pull something up just real quick. Now, I'm not trying to trick you, okay? But a lot of times when we see some sell signals, we think everything means sell signals. So I'm going to try to trick you a little bit here. Okay, this is why I kind of like this. Okay, here I go. Now, if you looked at UNH, is this showing a sell signal, yes or no? Yes or no? It's a maybe fair question, right? So if we go back to this, we kind of have to say, well, the 10-period moving average is up. Okay, we just got into this trade 1 or 2 days ago. Price is above the 20-period moving average. This is like the flip of what we saw, right? The price gets above the 20-period moving average. The chances that line actually goes green, it becomes a lot higher. Okay, so this is not showing as sell. I mean, this one is actually A, it's still positive. B, it's actually above the moving average. So far, it's trying to hold itself. Now, before we actually look at some new ones now, I want to actually just share this chart with you for just a sec. So let me just share this whole grid with you. I'm going to share the grid with you. Let me kind of point out some charts that we talked about that I think are important. Okay, so now I just sent to you the grid. These are the charts I like to use in terms of evaluating the, let's say, new setups, whether we're evaluating a bounce, a hold, or a breakout, okay, or adjusting stops, things like that. Now, what I'm going to do is, let me actually just see something real quick. Yeah, we'll keep it there. Now, the chart I want to pull out, so when you bring this up, go to setup, go to open shared item, set up open shared item right there. And then all we're going to do is just copy and paste it back in. When we copy and paste, all we're going to do is say preview and then import. Now what happens there is it brings up a little mini chart. There it is. If you said, well, how do I save it on mine? Go to where it actually has those little boxes right here. And you click on that and you say save grid as. And then you could call it what you want. So when you take a look at this, if I go now back to style and say load style, you're going to see that there it is. Let's say I just call it the package of charts that we normally like to look at. Okay. The charts that I want us to kind of highlight here is really the first chart, of course. Okay. I like to also pull up really the fourth chart in. And I'd also like to really pull up the chart of, pull this up. Would really also like to pull up the fifth chart. Okay. So the first chart, the fourth chart, which has the day's lows, and really the fifth chart that really actually has, in this case, the kind of the more intermediate settings, which allows us to kind of like taper down some emotion when the S&P goes down 0.3%. And we think that everything is a sell. It's probably not. Okay. Now, are there any questions here? Any questions? Yeah, so I'm going to double check. Laura, real quick, if you could copy and paste. Okay, is there a webcast that shows? Okay, so the comment from Laura was, is there a webcast that covers or recovers how JB sets up his market watch on the columns? Now, here's kind of the nice thing, okay? Now, Laura, thank you for being, pointing this out. So here we are. If you went to youtube.com, and then we're going to look at some new ones, new trades after this. If you subscribe, okay, for free, And what you're going to notice, and a lot of people don't realize that there's a little icon there, a little kind of search. What it is, it's searching on our channel any topic. So if I said, for example, let's say Scripps, James Boyd, okay? So if I, for example, looked at this, it's going to pull up any class that I have done probably in the last 2+ years, anything on Scripps, okay? Now, if you ask me, like which ones I would say kind of stood out a little bit, now I'm gonna send you the link too, but how many of you did not know that that was there? So if you had any topic and you said, hey, I would like to learn about XYZ, how many of you did not realize that that was there, okay? That's important. Now, if I said, hey, which ones would stand out to me that I know a lot of people did like, the ones that I would say that stood out to me is I would actually go back to, and I'm just going to go back and see the first one that I did that's on here. I would really go back, and I'm going to share the link with you, Laura, so you don't have to look at this, all of them that I've done, and you're going to see that that's kind of a joke that I've done a couple over time. The ones that I'm going to actually share with you is this one right here had stop looking. It's here in one view. Let me share with you this. I'm going to open a new tab, and let me share with you this link right there, okay? So that's probably, if you said, what is one video where I could actually see that? I'd probably really be looking at that one right there, okay? That's probably the one that I would start with. Now, by the way, there's some that I recently just did, okay, earlier, that there's others, but I would probably say start with that. The second one I would also probably say is Breakout School with Scripps as well, okay? There you go. All right, Laura, let me know if that helped. Now, Jim says, just real quick, any idea why I don't see the left-right arrows next to the grid like yours? Okay, so why is that the case? So the question is, do you have the package Scripps loaded? So what's going to happen here is if I pull up, let's say style, and I go to load style, let's say just like trend, and let me actually just do this. And actually, let me just kind of show this. If I did this, okay, this is really kind of showing just a 2-grid chart, okay? Last question, we're going to look at new trades. If I actually just said, I set this up as 2 chart, you're going to see that there's 2. Well, if I went back to, let's say, the package, pull this back up, now what you're going to notice is there's a couple there, okay? Now, how do I bring up the grid, like the first chart? I click on that little 3 lines right there, go to maximize cell right there, and then that's now going to pull up that which I had before, okay? So, got to ask yourself is, do you have that chart up? Okay, cool. All right. Okay. Want to answer your questions, okay? Because you asked these questions, and I thought we'd take a little time to answer those. Now, let's take about the next 17, 18 minutes and kind of talk about some examples that we're seeing in the marketplace, okay? Now, I think this is really important that we talked about, like, reviewing exits. Because, you know, if you're late, if you're not sure, that can really cost potential unrealized gains. That would be horrible. I'd feel sick, okay? Now, what I want to do is let's kind of take a look at some examples. And I want to go back to just real quick the IXE, which is the energy sector, just briefly. And I want to kind of look at a couple stocks, okay? So we talked about this in the last maybe 2 weeks or so. Could energy be starting to break out? I think it's worthwhile when we actually bring up energy. I do also want to point out 2 fertilizer stocks that actually got a little move here today as well, okay? Now, when we think fertilizer stocks, which fertilizer stocks do you think about? Now, go ahead and actually type that in. Your answer to that question, which fertilizer stocks? If someone says, hey, do you know any fertilizer stocks? What would they be? Well, we know what we would be thinking. We'd probably be thinking about the ones that we've seen in the last 25 years. Number 1 would be actually Mosaic. And actually the second one would be, survey says, CF. And so what we're seeing in both of the kind of this theme of, it started with gold, it started with silver. And then it actually went into kind of some industrials like Caterpillar, CMI. And then lately it's actually been getting into, let's say, some of the energy stocks, oil-based. And then today we actually saw a little pop in fertilizer. So there definitely is a commodity-based theme here. But don't forget about, let's say, the fertilizers, because those did break out of some areas of resistance as well. Now, back in like '07, I know I'm dating myself. Yes, I was like 28 years old at that time. I still had a baby face at that time, so don't hate me. But yes, but the biggest thing is these used to be stocks that would explode, especially in a commodity-focused market. Now, I want to go back to just real quick a couple of these stocks. I want to go back and look at PSX. Now, what I want to do right now on Schwab.com, I want to type in PSX, and we're going to look at Paul Sam X-ray. Now, what I want to do here just a second, and I'm going to grab that. Sometimes that actually does that. Okay, I'll wait for that to load. But I'm going to go back to just real quick the analyze for just a moment, and I'm going to look at, let's say, where it says fundamentals, okay? Now, when you look at PSX, you're now going to see that when we look at some of the numbers as of lately, now some of the, why are these energy stocks not maybe, why do they not trend as much as maybe, let's say, other sectors? They're volatile, okay? So when you think about commodity stocks in general, they tend to be more trading type stocks. Now, when we actually take a look at sales per share, you're going to see that these companies can kind of be all over the place. If you look at year-over-year differences, that's a big difference just in a 2-year period of time. And then you actually look at the swing there and a swing here, a little bit narrower. Now, where we've also seen some differences is not just in the sales, but it's also in the earnings per share. Big contraction really in the earnings per share from 23 to 24, at least if we look at the year-over-year numbers, okay? So when people talk about investing in, let's say, energy stocks, let's say Exxon, Chevron, PSX, things like that, they might be trading them. If they are investing in them, they're probably doing like buy and hold or longer term type of technical analysis type of trading. Now, when we actually pull up PSX, what I want to do here is if we take a look at this kind of has what type of potential pattern on the chart? Anything? What type of pattern would you be seeing? Now, this one, if we take a look at this, we kind of really see like a little drop down in price, right? A little run back to the upside and a little sideways action. And then what you're going to kind of see is a little pop. Now, you got to remember something. It doesn't matter if the market's going straight up, slightly up, a little bit up, flat, market's down. It doesn't matter when anyone takes a position. We're going to have risk in any given trade. Now, if you at least buy a stock in a sector or the industry group, you at least like to see that the sector industry group is going up, that it's not probably just one stock, that it might be 2 or 3 where other investors can see it, and they also maybe try to get in the stock as well, okay? Now, what we're going to do in this case is we're going to try to buy the shares of that stock, right-click on the chart. That's one way we could do it. And if I actually bring this back up here, right in the paid money account, we're going to right-click on the chart, okay? Just kind of look in order just real quick. Buy custom, and then go with OCO bracket. Now, when we're on a chart where we're kind of up near the high, you know, it's about the little joke that we've said over time, it's still funny. If the chart is at the low, it can't go any lower. And we know that that's malarkey, okay? We know that if a chart is at the high of the chart, it can't go any higher. Well, that's malarkey too. The chart just adjusts, okay? So sometimes like on this, we need to probably go back to a 3-year weekly chart and kind of say, what do we see on this chart? These prior highs or resistance might kind of be where the stock might try to go to. You got some levels right around 140, got probably another level, let's say right around 148, or maybe another level, let's say right in the ballpark 170. So these might try to be pit stops over time. Now you got to remember when you look at, let's say, PSX, you got to think about what are they selling. They actually sell crude oil, feedstocks, okay? They also sell refined petroleum, and you're also going to see that they also do natural gas liquids. So if you're actually trying to buy PSX or any of these, you're really watching the natural gas markets to make sure, is there an upward trend? Are they starting to break out? If we actually see crude oil start to go to the upside, that could actually help some of these companies as well, because they could be selling their product into a market that actually is fetching higher prices. Higher prices, higher sales, higher potential sales, higher potential earnings per share. Okay, that's the idea. Now, if what we're going to now do is we're going to put a target on this. Now, if we look at actually that target, if we go back to this, I'm going to put a target. We cannot put a target at 140 or something like that. We're going to have to say, look, we're going to need a target of probably 148 to offset what that potential risk is. Okay. Now, if we take a look at this, Tom, I'll come to your question in just a sec. If I go back and look at, let's say, this low point, okay? So if I look at this low point, we really got a diagonal trend line sitting right there. That diagonal line on the three-year weekly chart is right about 130.05, okay? So if I look at that, if I take 130.05 less 2%, it's going to be right at 127.44. Now, I want to kind of speak. So Tom's question was, please send a whole indicator link. So let me send this link to Tom, but I also want to share with you. So when I share this chart, it's just going to share the chart, okay? Now I want to show something to you. This chart is probably not appropriate for everyone. It's probably not, okay? Now, what do I mean by that? Because not everyone is a trader, okay? I know you're thinking, well, who does that? There's people that just like to do short-term type stuff. They just like it, okay? Now, this chart, this link that I'm sending you, it's only of the chart. Now, let me speak to something just really quick, okay? Data GTC, data GTC. What I'm going to do is I'm going to put about 50 shares in the IRA account. Now, think about what we've done. We've sold in this account, we sold Exxon, we sold Meta, and we're trying to get out of positions that have fallen down, maybe are at an area of resistance or below the moving averages, and we're trying to put the money in areas that are above the moving averages. I had this epiphany one time. Man, the portfolio is going down. And I looked at the number of positions that were below the 10-day moving average, and I thought, my gosh, it's like they're just losing. And then you've had times where, my gosh, everything's like going up. It's Christmas tree green, trend three, trend three, trend three, trend three. And it's like, what's the common denominator? They're above the moving averages. So we're trying to get out of the ones that could be at resistance or down below the 10, and then get back into ones and saying, could these potentially go up? Do we know for sure that they're going to go up? No, we don't know that. There's risk with every trade, okay? Now, what I'm going to go ahead and do is say confirm and send. Now, when I go confirm and send, remember how the stop works. It's saying sell that stock if it goes to that price or less. We don't know where it's going to sell at because it's a stop. A stop is a market order. I'm going to send that. There it is. Now, just real quick, what I'm going to do is let's go back to this test tube for just a sec. I want to speak about just kind of adjusting the moving averages. I've shown this both ways. If you said, James, I'm not really sure if when you said that maybe this chart is not appropriate for everyone, I kind of felt like that was me. Well, you could slow this down a little bit if you said I'm more intermediate. Let's take the 20 out for just a second. And what I'm going to do here is I'm just going to type 30, okay? Now remember, 20 days, okay, about 1 month, 30 days, about a month and a half. So if I did 30 days, let's kind of just show this. There's 30. But the problem is the cloud is based off 1020. Well, how do you change it? We don't need to know that much about computers to say, look, the little gear setting symbol, that's the settings, okay? Now if I do this and say 1030 to match the moving averages above, there's 30, there's 1030, now it should be matching. So when I show this now, you're now going to kind of notice that the signals are not going to be as quick, okay? They're not. And you're going to see that it's meant to be a little slower, okay? Now, I think what would be interesting is wonder if you did like a 1020 chart versus a 1030 to see the differences. Go for it, okay? Now I'm going to put that back just real quick and we're going to look at another one. Now, I think it is also appropriate to say when someone's managing a portfolio, does it make sense that everything in the portfolio is short term? I think you also have to be careful as that as well. Like, now let's just kind of say that someone said, James, I like to take 10, 20% of my portfolio and do it short term. Okay, fine. If someone said, I like 70%, you know, the higher percent, you could have gyrations in the market where you could realize gains or losses in a short time frame. So, not against short-term trading, but it's just the higher percent of the portfolio. That's when it kind of, you got to realize there can be adverse outcomes, especially with shorter term type of gyration. Now, what I'm going to do is I'm going to come back just real quick to this, and I think I changed that. Let me reload that chart. Now, I want to go back to just real quick another one, and I want to kind of pull this up. Now, there's been also a question on I'm going to pull up, let's say, let me show a couple stock charts. There was a question regarding Intel. Now, this is about a week ago or so ago. And we know that Intel, they have been in, let's just say they've been in a struggle. Okay, that's a nice way to say it. At Intel, they actually got some backing by the U.S. government to at least kind of make sure that the U.S. market has chips here, not just Taiwan, not just China, et cetera, that we could actually try to make our own chips. Now, NVIDIA is also kind of taking kind of some equity position, cash-wise, where they're also trying to, let's say, hey, we want to work with, let's say, Intel. Now, what you're now going to notice when you look at the fundamentals, obviously the technicals have been horrible. Now, this is not, when you look at some of these numbers, the earnings per share, it's like a slide going down. Sales per share, slide going down. Free cash flow, slide going down. These are not normally the charts that we look at, okay? Because this is really kind of showing where they're not selling as much. The products that they actually have, less people want them. If less people want the products, it actually hurts their profitability. And before you know it, the business is going backwards, okay? And what you're going to see is in 24, they actually went negative. You actually look at this and 20, okay, 19, 21, okay, that was the top. And when Apple pulled away from them and started making their own silicon chips, man, the business really in 2021 started going backwards, okay? That's not a great thing to actually see a 40% reduction almost in their sales. If you reduce 40% in reduction on their sales, everything below that is just magnified at a bigger percentage loss, okay? So why are we bringing this up? Well, this is kind of really to show that sometimes what is negative can actually turn back positive, okay? But you got to understand that there's some drivers here that could be helping their business try to become a little bit more stable. Now, that's all great and good, but the investor is still saying, look, I'm willing to actually get in, but I actually want to identify where the investment is wrong at that moment in time. Now, on this chart, we kind of see a breakout level, right? Right there, 25.5, and you see the kind of the gap, and then we're actually looking to see where do we fall back down to. Well, here we kind of fell back down to 28.77, and we actually saw the price start to bounce back up. Notice at the bottom of that pullback, there's a red color candle and a green color candle. And we kind of think of that as the V, if you will, where we stopped going down and then we started going back up. Now, what I'm going to do on this chart is, now, if someone's buying this, technically, they think that it could actually go back up. Second, they're actually thinking that the fundamentals might improve. Now, let's say we're going to buy this. We're going to go to buy custom. We're going to go with the OCO bracket. Now, what I'm going to do here is I'm going to take 28.77, okay, and we're going to take, less 3%, and it's going to give us 27.90. Now, this is not something that we normally do because most examples that we look at are based upon companies that have a proven track record, not something that's been in the doldrums and starting to reverse. Now, we could say that that's where Boeing was too, okay? Now, if we went back just briefly and said, okay, where might a resistance be on this chart? Prior supports, prior tops, probably looking at, let's say, if we're talking about levels here, probably talking about 3270, which we just went to last week, and probably then talking about kind of the next channel between 32 and 37. Now, the whole goal here is to get other companies involved. So if you get NVIDIA to actually be involved, maybe let's say the US government says we need to make sure that we have a company here that controls the supply so we could actually make our own cars and not be just dependent upon China and things like that. It could actually try to buoy their business. And it was kind of no different than what we really saw with Boeing and Airbus. Now, what I'm going to do for time's sake is we're going to put a target at 37 and set a stop at 27.90. Okay. Now, I'm out of my time here today. Some stocks I want to kind of just make mention of. Keep an eye on AMAT, Baker Hughes, BKR, QCOM, Tesla, RTX, and Ulta. Okay. Now, stay tuned for our next class coming up right at the top of the hour. We talked about kind of looking at practicing selling and evaluating what would constitute, let's say, a sell signal to practice in the paper money account. And then we also talked about some new examples as well. I want to say thanks to Connie for answering those questions in chat. And also I tried to answer some of those questions that you had as we went as well. Now remember, with what we discussed here today, it was done for example illustrative purposes. Don't forget to go to schwab.com/events to see other events that could be happening in your area. Now, with what we talked about, it was done for example illustrative purposes only. Stay tuned for our next webcast on coming up right at the top of the hour. And thanks to Connie and thanks to all of you as we've discussed trading growth and value stocks. With that said, take care. I'll be back on tomorrow at 1 p.m. Eastern as we talk about trading the trend. Take care. Bye-bye.